Good morning, traders. It's Tuesday, the 1st of November, 2016. It's 8:02 a.m. Chicago time, coming at you from the financial district of downtown Chicago. This is another Trader Bite. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight news flow looks mostly like allocation is to risk, although the DAX and the Euro stocks are lower by about 25 to 28 basis points this morning. Um, but it does look like the market is somewhat um, is allocating more to risk today. We haven't gone anywhere overnight in the S&P 500. Still trading 21, 24, 75. Very sluggish session yesterday, and it continues today. A couple of interesting things I'd like to cover with you today, but the news flow overnight is that China's manufacturing PMI rose 0.8. The pace of growth of factories in China is the highest in 2 years, so that's pretty good news for them. The Bank of Japan, as well as the Australian Central Bank, held rates, and the Fed starts its two-day meeting today with the announcement coming in tomorrow at 1 Central, 2 Eastern. That's probably what's what's keeping the market on hold right now. And in case you haven't heard, then I'll show a chart of this. Uh, the RBOB price surged up yesterday. It just exploded on a spike. It looked like a fat finger spike for a while. RBOB is gasoline, and it turns out it's the result of a pipeline in a major pipeline in Alabama that exploded and is likely to hamper supply, which means prices are likely to go up. And then finally, October was a record-breaking month in terms of mergers and acquisitions at 489 billion deals done. It's the highest amount of mergers M&A activity in 12 years. So that's a big deal there. As far as what we're expecting for today, going forward, we have U.S. manufacturing PMI final at 9:45 this morning. At 9:45, that's for October. 53.2 expected. Then at 10, we get construction spending expecting 0.5%. That's for September. And ISM manufacturing expecting 51.7 in October. That's at 10 o'clock as well. 10 o'clock also brings IBD tip economic optimism, expecting 48.5 for November. And then other than that, we're pretty much free and clear. We get earnings from Gilead, $2.84 after the market. But that's what's on deck for today. Again, the big news is tomorrow at 2 Eastern, and then of course Friday with the non-farm payrolls. Let's take a look at what we expected yesterday versus what we got. Here's our primary hypothesis from yesterday. The expectation was for a reversal and for the market to resume its auction back up to 21.34 and beyond, like it was doing on Friday. However, it just did not go anywhere. We ended up pushing lower, just like we saw here. A consolidation on the open, a push lower consolidation, but the rest of the day ended up being just sideways yesterday. Didn't go anywhere. Secondary hypothesis is pretty much what we got yesterday again, but eventually the expectation was for a false push up and then a rotation down, and we didn't get that either. So it's look, there's nothing new to be said here. I mean, we've been stuck in the same range for quite some time, and there's nothing new to factor in. I mean, look at this daily chart. We've been in the same range for quite some time here. And it's just there's only so much I can say about how it's going to trade. Now, I still, even though it's choppy, even though it's all over the place, I still come in with a daily plan every day and monitor what the market does and look for opportunities. And worst case, I scalp here and there. But in general, there's really no direction to the market right now. It's completely directionless. We do have a trend line that's pointing downwards. That's been there a while, and then it keeps poking through the bottom here and there, but it's neither releasing and going into the prior range, like been expecting it to push through this 2100 and start working its way down into this high volume node down here on the bigger time frame. But what we've done is every time we've tested this low volume node here, we have pushed right back. We keep pushing right back, and we are still stuck at the highest balance zone. You could see the volume up here, the highest balance zone, and we're not letting go of it. So it's short term. It's likely to push lower to complete some of the move from last week, but longer term, it looks like it is hanging on to value up here, and it's still more likely to rotate through and put in new highs than to push down and finally give us that much needed correction lower. Again, I trade without a bias. I'm just looking at from day to day what the action is saying, and it's not saying much. So it's pretty dead. Volumes are pretty low. Viewership is low here of the Trader Bite, and I understand that. It's just pretty redundant from day to day. So it's just the way it is right now. It's a dead market, but with balance, we have imbalance. I've seen this. I've been trading for 16 years, and during these dull times in the past, when I was less experienced, I would push my trades. And overall, I might have a few good days here and there, but overall, it's a net negative to try to push a market that is just not moving. It's better to just sit and wait and let it break when it does break. Again, balance leads to imbalance. This is yesterday, two-tick Renko. You can see that we can fit the entire day into about two-thirds of the screen. Not much in the way of action. We had an open auction on the open right here, and it just continued to open auction, open auction. It tested higher. It gave me a glimpse into potentially hypo 2 for a rotation down and out. Hypo 2 would set us up for a push up and then a pullback and then a continuation lower. Here's what hypo 2 was supposed to look like that. And that's what I was looking for, is a test higher, failure, and then push down. It just did not happen. We had a neutral day. The distribution looks very weighted on the downside, and it just looks like someone's belly, big beer gut, with the point of control right at the bottom of it, outside of the IB. Again, a neutral day. It's not an extreme. It closed right into the middle of the profile. The value area is valid. And then the overnight session was even more disappointing here. Let's look at the overnight session. There it is. It just did not accomplish much at all, even with the China news. The China news comes in here and gives it a bit of a boost, but overall, just not much to talk about here. We're trading on both sides of the mid, and we're shifting the point of control up and down, up and down, up and down. Not much to price in here. I'm suspecting that we're likely to start pushing lower and to take out the overnight low, more so than the overnight high in today's session for that 98% overnight stat. So we'll watch out for that. For those of you who weren't here, this is what's called RBOB. This is gasoline. The gasoline futures. You want to see what your gas prices are likely to do. You want to keep track of RBOB, and RBOB has been in a trades with crude. and it's been descending for a bit of time after a spike up. And then yesterday, with this gas line explosion, we got this spike all the way. It basically took back the sell-off that occurred through the entire year, took it back in one sweep. And the reason I got alerted to it is because we have, a watch risk here at stage 5, and we had a couple of shorts that set off all kinds of alarms. But look at that spike. I mean, it closed, it moved from approximately 143, $1.43 to $1.63 in about half a second, and just squished a lot of people. And then in the ensuing action, it continued to drift higher, which means that the news that caused that spike is pricing in and is in effect. In other words, it is taking hold. This market has been trading around its composite point of control, so the most fair price for this product for a long period of time now, for about 2 years, is $1.48, a little over $1.48 for RBOB. So that's interesting to see. We don't see that often. And it's a very thin product. You can tell from the profile. You can see these spikes here in the profile, just spiking all over the place. You can tell from the profile it's a very thin product. It's a lot. It's a lot like I don't know. It's not like any other product really. Natural gas maybe comes to mind. But if you're in that product, just be careful. It can make a quick move, very on short notice. So keep an eye on that. So as far as today, when we look at where we are in the big picture here, what have we done? Still, we are still struggling in this balance range since the drop of September. We are below this point of control, which is down at 2134 now. And yesterday didn't make any progress at all. So I'm still looking for uh, the potential for a push down to complete this the selling that's occurred here. So I'm looking for a retest and a push down overall, with 2096 being the key area to test below, and it's just not going anywhere. So pretty boring market right now as we sit here and wait for something to happen. Not much to say here, so I'm gonna get down to the hypotheses and let you guys go. This morning, the expectation is, again, we're opening against yesterday's value. We're opening higher. The expectation is for an open auction. I'm looking for it to rotate lower, test the point of control, and then potentially push below yesterday's low and then revert back and stay in balance for another day. We had a neutral day yesterday. I'm expecting it to stay in balance again today with the FOMC tomorrow. That's the expectation for today. As as far as the secondary hypothesis, it might rotate up. The point of control is above us. It might rotate up and make a couple of attempts at pushing higher, push lower later on, and then fall back in line and then continue to work its way through this balance zone just like we did yesterday and in line with hypo 1. So hypo 2 pushes higher at first, gives us a chance to sell the rotation down and come back into play and return back to 2120.75 versus hypo 1 pushing lower first, completing the test down, and then rotating up and balancing in the middle. Okay. The third hypothesis is an open auction, test lower, find buyers near the yesterday's close, and then start rotating higher and push towards 2134 after balancing yesterday. Remember, yesterday balanced inside of Friday, and it was very tight, very low volume. Today might have us pushing, although that's a lower probability again with the FOMC tomorrow. There's no sense in committing much into the market without with that uncertainty looming. That's what's on deck for today. I'll let that simmer for a bit. Just take your time again, as always, today, and just you know, let the market set up before you dive in. Good luck, and I'll catch you tomorrow. Take care.